Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Podcast for Wednesday, March 6, 2024. Podcast, as always, brought to you by Capital Mortgage Funding, powered by CMG Home Loans. 1820 is the NMLS number. And today, very rarely do we have a theme, I would say a theme for a podcast. But today, we're going to have a short, sweet, informative podcast today. Guests today are Mr. John Kolb, top 1% of all originators in the United States. Good morning, John.
Good morning.
And Mr. Harvey Freed, one of the co-hosts of the Hardcore Mortgage Real Estate and Business Show, heard every Saturday morning from 9 to 10 on 97.1 FM here in Detroit. Good morning, Harvey.
Good morning, gentlemen.
So as I previously stated, we very rarely have a theme, but today's theme is really going to be, it's really after our show that we have every week, the Hardcore Mortgage Real Estate and Business Show. It's going to be called the Hardcore Truth. So today's theme is hardcore truth. Now, there's a popular thing now that everybody has their own truth. This is my truth. No. There's really only one truth. And then we have the hardcore truth. Truth always has to be based upon facts. Everybody's entitled to their own opinion, but not their own set of facts. Facts are facts. So here we go, gentlemen. We're going to get to it. Short and sweet. Hardcore truth is the topic and the theme of the show today. So I guess, John, I'm going to start with you. Again, this is the truth. The truth is you cannot fall on the wait and see what rates are going to do bandwagon. You can't do it because I'm going to give you the facts. The facts are right now, regardless if you're looking to purchase a new home, an existing home, or refinance your existing home, rates are not going down that substantially to where you're going to save money currently. Let me get it out there. If you're in the market and actively looking to buy a house, John Kolb, you need to pull the trigger because you're not saving money by waiting. If you're paying 18 to 22% or more in some cases on your credit cards, then you need to pull the trigger regardless of what your rate is. Let's say your rate is 4%. You're paying 18 to 22 and in some cases higher. And if we can get you a 7.5% interest rate, John, it's still lower than 22%. So the hardcore truth is by waiting to buy a house, by waiting to refinance your credit card debt, you are losing money, John Kolb.
100%. You must be monitoring my pipeline because in the last 2 days, I've had two of these. So I'm really excited to start to work with some people who start to understand how the math works. You got to look at your blended interest rate, how much you're paying on your interest rate on your home versus how much you're paying on your cards. Put them together. Like Harry said, 7.5% interest rate. See what we're going to be saving on a monthly basis. The one yesterday was saving $900 a month. He's going from 3.125 on a 30-year fix all the way up to 7.75 on a 30-year fix. But $900 a month in savings. That's coming because we're paying off so many credit cards and so much high interest rate debt. I'm glad that people are starting to understand it, realize it. It's a numbers game. It's math. If you're not good at it, talk to us. We can figure it out for you. We can show you how it works out. And we're talking about just minimum monthly payments too, Harry. $900 a month is what based on the minimum monthly payments that they're paying on their credit cards, not what they are paying extra over and above to try to pay the credit cards down. So you could be talking about $1,000, $1,100, $1,200 a month in savings once you talk about adding some principal to that credit card payment.
And John, the good news is if they're saving $900, then they could go ahead and take $500 out of that $900, put it down on the principal of the mortgage and pay that down faster and
100%.
still have money left over. So my point is, because I'm so ramped up this morning about the hardcore truth and the math, is that people are caught on waiting for interest rates to come down. Furthermore, John, and we'll get into it a little bit later in the podcast, they're not coming down this summer. They're not coming down to 5.5, but I'm going to save that till the end. So Harvey Freed, by saving money, by wiping out that toxic revolving debt, people can also go ahead and check with their CPA is deduct the interest up to a certain point, right? Along with their property taxes. Yes, of course, Harvey, they've got to tear up. If they've got 5 cards, okay, keep 2 out of the 5. But you can't get on that merry-go-round and continue to charge up that revolving debt if we're going to save you money, right?
Yeah, it's not only the revolving debt, it's also the student loans. And working this morning with a client who put himself through college, and congratulations, he did the right thing because he's got a great job. It's 78,000 in student loan debt. So yeah, you got to really cram the numbers down. There's all sorts of different programs. There's different ways we can work with the debt to income ratio. You know, we can use 0.5% if your student loans are in deferment. But if you've already got your debts all organized, you need to sit down. John Kolb, it sounds like he did it with his client yesterday. Sit down and figure it all out. I think at the end of the day, my client was a little shocked, and it's a simple thing. If his wife goes back to work, which she was always been working, they're going to qualify together, be able to get the house of their dreams. And again, sell the condo, make some money, pay off a lot of their debt, and buy a new place. I don't feel like people are waiting. There's plenty of buyers out there. The lack of inventory is definitely already showing itself as multiple offers are coming in.
Yeah, we are joined by Becky Alley, top 1% of all originators in the United States. Becky, the theme of this podcast, I rarely have a theme, but I'm pretty ramped up about this. It's about the hardcore truth on what's really happening and how people are waiting to either take money out of their house and pay off that toxic credit card, revolving debt, student loan debt, because they think rates are going to come down. And they're waiting. If they're looking to purchase a new home, whether it's new construction or existing home, they're waiting for rates to come down. The hardcore truth, Becky Alley, is the rates are not coming down. They're just not going to do it. I can back it up with facts. We'll get into it a little bit later, but we start off, if you're paying 18 to 22% or more in some cases on toxic debt, what are you waiting for? You've accrued so much equity in your house that you could take a portion of it. And again, we are not big fans of using your house as a piggy bank, but the math doesn't lie. John had an instance. He's got somebody saving $900. He accused me of going ahead and kind of snooping in his pipeline. I did not know that, John, but I am actively trying to get loans closed, but I did not see that it was a cash out refi or 2. That's the good news. But Becky, you've been doing cash out refis all along, correct?
Yeah, I haven't stopped even when the rates were 8%, because it is all circumstantial, right? Somebody else, it makes sense for them. What makes sense for somebody else might not make sense for you, but it's all about the conversations, and it's all about, like you said, the math is the math. I have 4 or 5 that are closing this month alone. One of them we're saving $1,000, right in line with John. Another one is doing a cash out refinance on a free and clear so they can accumulate more real estate, right? So scared money doesn't make money. So you have to be in alignment with a team and make sure that we are making decisions that make sense for you. So if you're even trying to accumulate more real estate, you can use the real estate that you have now, pull that money out, and then buy another house. We have one that's happening in California. They're doing a refinance on their California property because they are trying to be active investors in Detroit, hence my hat, right? Because Detroit is up and coming. There's still a lot of amazing things that are going to happen in the city of Detroit that we're around. And there's a reason why the investor doesn't care what the interest rate is. So that's the other part of it, is getting these first-time home buyers or these step-up buyers to understand that the interest rate is arbitrary. We're in a moment in time. And if you can afford $2,800 in rent, you can afford a $2,800 mortgage payment. It's just finding that price point that works for you. So I'm in alignment with all these things. Waiting for everyone else to make a move and then you get in line behind all those other people is just going to set you up for failure, because then these price points are going to be going up even more so now that the Midwest is waking up from its long winter's nap and people are really starting to get actively out there shopping for homes.
Yep. So bring the hardcore truth on saving money and not waiting. Waiting is going to cost you money, as we said. Waiting will not save you money. And here are the facts to back this up. Housing affordability has declined over 70% in the last 4 years. What does that mean? that if you waited to buy now, okay, it's less likely that you can afford what you were looking for in the past. It's gone up that much, 70%, okay? So what else is happening is rent has increased. It's doubled in the last 10 years, and it's up over 50% since COVID. All right, so the only people making money are landlords, and you're paying, if you're still renting and you're listening out there, and we've got people all over the country, all over the world listening to this podcast. If you are renting, it's costing you money by waiting. So if you didn't pull the trigger 4 years ago, you're paying way too much. And again, I'm pretty emotional about this because I don't like people wasting money. One thing that really bothers me is when I see people, when they procrastinate, they're waiting. They're nickel wise and dollar foolish. Housing affordability has declined. Why? Because you're waiting, John Kolb, to go ahead and pull that trigger. So, for example, if you're looking to buy a $200,000 house, last year it cost you $200,000. This year, minimum, it's going to cost you $220,000, John Kolb.
Right. I mean, we're talking about 10% appreciation each year, and we talk about it every single day. I actually had some conversations with some realtors the other day. They're on board with that same thought process. It's just trying to convince the general public. And I don't think it's so much the first-time home buyers or the people who don't have homes. It's more the people who are trying to move up, have a property to sell as well, because they're scared to try to make a move without having a house to buy yet. So why put their house on the market if they don't have a new house that they're interested in? I get it. We talk about it every week, every Saturday. We've got to be some sort of reverse contingency out there where you don't close on the sale of your home until you found a house that you're going to buy. Trying to open up some markets, but that's just my thoughts, and hopefully we can start spreading the word a little bit more.
Yeah, I was talking to Harvey Freed. I was talking to a client. Lives in Arizona, and I was talking to this client over the weekend, and he's looking to make a move, and he's got a nice place in Arizona. He's looking to buy another place in Arizona, but he feels right this second that it would be a lateral move for him, that if he sells his house for X, he's going to get a lot of money, a lot of equity out of the current home in Arizona, but what he has to pay for in a house would only be a lateral move. So I said to him, wait, do you think that housing prices are going to come down? I said, so what you do, if you're really looking, take a look at making a move up. He's got the financial wherewithal to do it. And we have to go ahead and preface it by saying, we only want people to do things what they can do, what they can afford. So this person can afford it. We went over all his numbers. And I said, wait a minute. So we'll go to the next level. You can certainly afford it. And that house is going to appreciate, especially where he's looking in Arizona, Harvey. There's still, Harvey, that wait and see mentality. I don't understand it, because if you're selling a house right now, yes, you're going to get top dollar. You're going to pay top dollar on the other end. You can always refinance that rate in the future. I'm not going to tell you when they're going down, Harvey, Becky, and John. I'm going to tell you if and when they come down, we could save you money, Harvey.
Yeah, we're in the real estate business in the mortgage industry. So we can always refinance the mortgage, but at the end of the day, it's a lifestyle choice. And as just like you said, Harry, if you sell your house, you're going to get a lot of money for it. And when you go to buy the new one, that seller's going to get a lot of money. But if homes appreciate and your lifestyle dictates that the location you're at now, the amenities they have now are not fitting your lifestyle, making that move, it takes a little bit of guts, does make sense still. Again, you get one shot on this side of the grass. And if at the end of the day, Harry, whether we're giving the information and people are feeling comfortable and becoming more confident, then they have to realize that if they make the move, it's because they want their lifestyle to change. They want more room. They want to be maybe on that golf course. Maybe they want that pool in the backyard. And that's what makes it fun. That's the part that makes it fun for all of us, is that when someone does make a move, whether or not they can, a little scary if it costs them a little bit more money, that somewhere down the line, that more expensive house is going to appreciate. And at the end of the day, they're going to have more wealth from that.
Hey, Becky, before we move on to a different topic, you brought up the Midwest, and the Midwest and Detroit and Michigan, Chicago, Illinois, Grand Rapids, Michigan, Cincinnati, Ohio, Lansing, Michigan, Metropolitan Detroit, all were places right now where investors are going to look to build new homes, build new apartment communities. And here in Metropolitan Detroit, there's so many apartments going up because these builders are taking advantage of people that are renting. Okay, we're trying to put them into homes, but these builders and these investors are savvy and they see the amount of people that are waiting to buy homes. So, Becky, they're continuously building apartment complexes all around the Midwest. And they're also coming in to a point that you've made, that we've made several weeks on the podcast and the Hardcore Mortgage Real Estate Business Show. They're coming up and buying whatever available properties in certain urban areas to turn them into rental properties, Becky. That's a problem for people like you and I.
Yeah, I mean, and that's why there's a lot of these programs out there that are specific towards people that are going to be occupying the properties, is because we're trying to make sure that people do not remain displaced, because ultimately the American dream is home ownership, and there's more millionaires that are made from real estate. So like I said before, there's a reason why investors are not sweating what the interest rates are. They do not care if you're giving them a rate of 8.5% or 9%, because they are all about that cash flow. And they know that we're in an appreciating market because we're in a housing crisis. So as a person that's going to be occupying the home, you have that same opportunity. You just have to shed that mindset, that scarcity of knowing that if you are going to get into a home, whether it's your step up home, your downgrade home, or your downsize home, or it's the first time you're doing it, there are specific programs that are going to get you in alignment so you can actually come out ahead of these investors. Even some of these bank-owned properties have it set where an investor cannot bid on a home for the first 30 to 60 days. Why? Because we're trying to make sure that people that are going to be occupying these homes have that opportunity, because maybe they don't have the cash flow. So we have the down payment assistance programs. We have anything that you could think of that's going to help you into that home ownership. And that's why we're so passionate about it, is because this is what we do every day. We see it. We're looking down the road, not just right at our nose. And it's your timeline, not ours, but you don't know what your timeline is till you have these conversations.
Yep. John, I'm going to get off of my diatribe right now, and then we're going to talk about some other things. So we're talking about the hardcore truth. The theme of this podcast today is the hardcore truth. The reason is because I'm just tired of all that, the false narrative out there. The hardcore truth is this: if you're waiting, it's costing you money. The hardcore truth is that rates are at the highest point currently in 2024 since January 1st, since the calendar turn from 2023 on 12/31 to January 1. Right now, rates are at their highest. Okay, that is the truth. The hardcore truth is they're not going down to 5.5 by the end of the summer. Why do I say the end of the summer? Because that's typically the prime home buying season here in Michigan. They are not going down to 5.5 by the end of the summer, if at all. The hardcore truth is that if they do come down, we can refinance you. So if you're waiting to pay off your credit card debt or buy a home, do it now, and we can always get you a low rate if and when they come down. Facts to back this up. In prepared remarks today, the chairman of the Federal Reserve, Jerome Powell, he's testifying today about rates. He's going to tell everybody what we know. He is not going to go ahead and reduce the Fed funds rate anytime soon until they feel that they're approaching the 2% inflation mark. That is the truth in his mind, John, not in our mind. But the fact remains is they will not be lowering the Fed funds rate anytime soon. Now, what's anytime soon? Could it happen in 60 days? Maybe. But the net effect on mortgage rates, they're not going to go down to 5.5 by the end of the summer. The facts are there are plenty of programs, as Becky directly mentioned. She didn't allude to it. That's a cliche. Well, she alluded to it. No, she directly mentioned all of the programs that we have. There are plenty of programs out there. There's plenty of money available. Fact. If you're waiting, you're losing money, John.
Oh yeah, You said you were going to stop on your triad, and I just got mesmerized.
My diatribe, I'm done. I appreciate
I've
that.
got
You did get
mesmerized by
mesmerized.
your ongoing comments. Yeah, I mean, what to say? It's everything we've said for the last weeks, months, years. That yeah, it's you're don't wait. So
Yep.
get off the fence. Don't be a Harry. Get off the fence and make a commitment.
Hey, Harv, I don't know. I don't even know what that meant. But anyways, I want to go to last. I want to go to last words. I'm going to start with Harvey. Whatever your last words are, Harvey. Then go to Becky. Then John. I'll let you wrap it up. And then I've probably talked enough. So go ahead, Harvey.
Just quick last words for me, Harry. It'd be just some of the newer buyers that I'm working with. Again, 50% of the clients out there are really easy. First-time home buyers or second time around. They've got lots of equity in their home or they qualify without even the sale of their home. And then that other 50%, just reaching out to as many people out there listening to our show, is to really take a look at your monthly debt. Debt to income ratio is a real thing. Again, if you want to qualify for the nicer homes as these prices continue to go up, make sure that you and your spouse are working full-time jobs. See what you can do ahead of time, knocking down the debt to income ratio and getting rid of something you don't need. If you have an extra car or some credit card debt and you have some extra money and you can get rid of it, those are all really good things you can do to just prepare yourself for the 2024 spring and summer buying season.
Appreciate that, Harvey. Becky Alley, last words of the day.
Real estate is busy. I just came back from meeting with people across the nation, and real estate is not asleep. Even though people think Midwest, we don't wake up until March 1st, and everyone's starting to crack their eyes open. The truth is that people have been already buying houses the last 60, 90 days. So if it's something that you're thinking about doing, have a conversation. It is about you, not us. We're here to help navigate what your timeline is and educate you and help you with those credits, help you with the things that you might not even know you need help with. But it all starts with that conversation and then getting in alignment with the proper real estate professional. So let's do that. And then I want to give a shout out to Brooke Brock. She's going to be our guest this week on the Hardcore Mortgage Show from BBR Realty. Super excited. She doesn't really have much of a filter. She's a straight shooter from the hip. She's going to hit you with the hardcore truth. And there was no one better that I could think of to get her on the show as quickly as possible. I'm really excited to have her on this week.
Oh, that sounds great, Becky. I appreciate that. And Brooke will be a valued guest on the Hardcore Mortgage Real Estate Business Show, heard every Saturday morning from 9 to 10 a.m. Appreciate her coming on. We're looking forward to that. Mr. John Kolb, final words of the day.
I know you're not supposed to be one of those people that comes back and says, I told you so, but I can't wait until this real estate market comes around and we can say, I told you so. We all know it's going to happen, and I'm ready to point some fingers and say, you know what? You waited, you missed out. We can figure this out for you, but this is what you lost on. So don't be those people. Don't be the person who loses out. Prove us wrong. Get into a house now.
Appreciate you, John. And also, we have a producer and director in the booth, Roberto Beauchene. He produces and directs the Hardcore Mortgage Real Estate podcast, as well as the Hardcore Mortgage Real Estate Business Show. As we said, heard every Saturday morning from 9 to 10. Harvey Freed will be there this week. Becky will be there. I'll be there. Brooke will be there. We might have some other special guests. That's yet to be determined. We'll figure that out as we go along. But anyways, I got to tell you something. Again, talk to people, again, all around the country. Talk to a builder developer this weekend, lots of clients this weekend. If you're waiting, it's going to be too late. The hardcore truth is, if you're waiting, you are losing money. You're not saving money. You're losing the money. Okay? So that's the theme of the show today. I appreciate everybody. I appreciate Becky Alley coming in, doing the show with us and the podcast. As always, John Kolb, Harvey Freed. I'm Harry Glanz. Everybody have a great rest of your day, and we'll see you soon.